President Donald Trump signs an executive order establishing the U.S. Strategic Bitcoin Reserve and the Digital Asset Reserve. And the moment the news breaks, the price crashes. And honestly, it doesn't surprise us at all. The tweet from David Sachs, the U.S. crypto czar, makes it pretty clear that the Strategic Bitcoin Reserve signed by the president is not what we were expecting. Seeing this bearish reaction in the crypto market after the disappointing news about how the US is structuring its Bitcoin and digital asset reserves has left crypto investors deeply frustrated. The key here is to understand the context behind this drop. First, why did this executive order, on the surface, a major positive headline, trigger such an aggressive sell-off in crypto? And second, what does the price structure tell us about this high volume drop, and what clues can it give us for the short and mid-term outlook in crypto? First, we need to recognize that the entire crypto community was anticipating a major event, the first ever White House meeting on cryptocurrencies. This was set to happen today, March 7th, and there was speculation that Trump would sign this executive order regarding Bitcoin reserves. But instead, we saw the order get signed a day earlier, on March 6th. And what really upset the market, rightfully so, is the fact that the US made it clear that, at least for now, they are not planning to purchase Bitcoin and cryptocurrencies to build their reserves. To understand this better, let's go straight to the source. It was David Sachs, the US crypto and innovation czar, who shared a tweet just moments before the massive bearish volatility hit. Look at this, he posted it at 1:11 a.m. Spanish time. And if we go down to the 1-minute time frame, we can see exactly what happened. At 1:11, for about 2 to 3 minutes, traders initially interpreted this tweet as something positive. Obviously, they didn't have time to fully read and grasp what was being said. But the moment more than 2 minutes passed and people actually processed the message, the unexpected letdown, that's when the market collapsed. So here's what David Sachs told us yesterday. In just a few minutes, President Trump signed an executive order to establish a strategic Bitcoin reserve. The reserve will be funded with Bitcoin owned by the federal government. Bitcoin that has been seized through asset forfeiture in criminal or civil cases. This means it won't cost taxpayers a single cent. Right away, they're making it clear that the main source of Bitcoin and crypto for this reserve will come from assets confiscated due to illicit activities. In other words, they're not going to invest their own capital or, by extension, taxpayers' money. Instead, they'll acquire Bitcoin through seizures. He then states that the U.S. government is estimated to hold around 200,000 Bitcoin. However, there has never been a full audit. The executive order mandates a complete accounting of the federal government's digital assets. So basically, he's taking a shot at the Biden administration, saying they've done a terrible job managing this, though we won't dwell on that too much. But honestly, it's wild that they haven't had this under control. At least now they're putting some order into it. Then he continues by saying that the U.S. will not sell any Bitcoin held in the reserve. It will be kept as a store of value. The reserve will serve as a digital Fort Knox for cryptocurrency, often referred to as digital gold. What they're telling us here is that they're going to hold on to all the crypto that comes into their possession, and we already know how they're getting it, through asset seizures linked to illicit activities. Then Donald Trump takes another shot at Joe Biden, saying that premature Bitcoin sales have already cost U.S. taxpayers over $17 billion in lost value. Now the federal government will have a strategy to maximize the value of its holdings. What they're saying here is that up until now, whenever the U.S. government seized cryptocurrencies from illicit activities, they would immediately sell them and convert them into dollars. But now, Trump and his team have done a cost-opportunity analysis and concluded that by selling off those crypto holdings instead of holding on to them, the U.S. has lost $17 billion. Another jab at Biden, though honestly that part doesn't really matter to us. And here comes something really important, which we'll break down in depth later. It states that the Secretaries of the Treasury and Commerce are authorized to develop budget-neutral strategies to acquire additional Bitcoin, as long as these strategies do not create any additional costs for U.S. taxpayers. Honestly, this paragraph along with the first one are the two most crucial. The first one triggered the massive crypto drop, and this last paragraph, we'll save it for the end because we need to analyze it carefully. It could give us clues about what the U.S. might actually plan to do with these strategic reserves and whether they intend to buy more crypto or not. Then they go on to say that, in addition, the executive order establishes a U.S. digital asset depository composed of digital assets other than Bitcoin that have been seized in criminal or civil proceedings. Basically, what they're telling us is that they won't just be confiscating Bitcoin, they'll be seizing altcoins and any other assets they deem necessary. And this is also key, because they later clarify that the government will not acquire additional assets for the depository beyond those obtained through asset forfeiture. They want to make this crystal clear they have no plans to buy crypto, at least not from the government side. Of course, keep in mind that the traders who tried to buy the news in the first 2 minutes didn't have time to fully process what they were reading. Then the statement continues, saying that the purpose of the depository is the responsible management of the government's digital assets under the Treasury Department. government. Basically, they want to do things by the book, nothing more. But let's focus on the most important part, this paragraph. Remember, it states that the Secretaries of the Treasury and Commerce are authorized to develop budget-neutral strategies to acquire additional Bitcoin, as long as these strategies do not create any additional costs for U.S. taxpayers. Let's break this down. When they talk about budget-neutral strategies, this likely means that any strategy used to acquire more Bitcoin cannot impact the government's budget or involve any additional spending. But here's the thing, they don't specify how they plan to do it. They just make it clear that the net cost has to be zero. Regarding the phrase acquire additional Bitcoin, it's explicitly stated that they aim to increase the amount of Bitcoin in the reserve. That's clear. This means they won't be limited to just confiscated Bitcoin, because if they were only using seizures, there wouldn't be an actual acquisition, just a retention of what they already have. Then there's the part about not generating additional costs for taxpayers. The key condition here is that taxpayer money cannot be spent. This rules out the possibility of buying Bitcoin with dollars from the federal budget. This clause leaves the door open for the U.S. to acquire Bitcoin from sources other than seizures, but without spending public funds. This suggests the government might take the following approaches: using part of its existing digital assets to trade for Bitcoin, allowing government agencies to mine Bitcoin directly, creating financial mechanisms or incentives to obtain Bitcoin without direct budgetary costs, even participating in staking, lending, or other financial strategies within the crypto ecosystem. And to sum up everything we've analyzed so far, what makes the most sense is this: there is likely a preference for keeping these crypto assets specifically in Bitcoin. They've left the door open to acquiring Bitcoin as long as it doesn't impact U.S. taxpayers. So, if the only method of Bitcoin acquisition is through seizures, and they've opened the door to collecting altcoins, this suggests they might sell off altcoins to convert them into Bitcoin. This could mean the U.S. may exert some buying pressure on Bitcoin, which could go against the interests of altcoins. Now, the real question is how much impact this will actually have on crypto prices. That's something we'll be monitoring closely. Another thing that remains open is whether the U.S. could participate in staking within the crypto ecosystem, because why not? But now, let's answer a key question. First, let's be clear, yes, this news is negative. That's why the initial market reaction was bearish. But how can we interpret this event, and how might the big players use this bearish liquidity spike to manipulate the market? We see this clearly reflected in the volume, how major institutions could be positioning themselves for their next move. And that's what we're going to analyze next. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
To better understand this context, we first need to talk about the S&P 500 and look at how the traditional market has been experiencing a sharp decline, down as much as 7%. For the S&P 500, that's a massive drop. It's aggressive. There have been worse ones, of course, but this is still significant. We see the same thing with the Nasdaq, which has fallen 10%. This index is naturally more volatile, so its movements tend to be more pronounced. All these declines, which we had already been analyzing, make sense. Failing to reach a new all-time high from this point could only lead to breaking a key structure, generating a micro black swan scenario that pushes the market down. This can be understood by analyzing price action and how major players manipulate prices. But beyond technical analysis, there's a fundamental reason behind all of this. And once again, the key figure in this video is Donald Trump. His aggressive tariff policies are putting heavy pressure on China. They're also escalating with Canada and Mexico. And negotiations with the European Union remain uncertain, adding to market instability. These tariffs, in the short term, end up hurting the US itself. We're already seeing the first signs of inflation breaking out of its previously positive trend. The US seems to be backtracking in this regard. All these events have triggered the sharp downturn in traditional markets. At first glance, we just need to understand the nature of this kind of event. Some might wonder if this is enough reason, looking again at the S&P 500, to trigger a macro black swan event and a global recession. The truth is, that's not necessarily the case. Even if the market drops further, it doesn't mean a global recession is confirmed. We only have to look back at late 2022 when the war between Russia and Ukraine broke out. Markets also experienced a massive sell-off, down 24%, which was huge. It looked like everything was collapsing, and yet institutions used that fundamental event to absorb liquidity and then and drive prices higher. So what am I saying? Even if US inflation isn't looking great, potentially worsened by these aggressive tariff policies, it doesn't mean we should assume a recession is inevitable. Not at all. Instead, we should remember the nature of the American market. The best indicator of all is the S&P 500 itself. Yes, there are periods of price contraction. That's natural. Markets don't rise in a straight line forever. But look at the trend. Markets drop a little, then recover. Drop a little, then recover. Drop a little, then recover. I could keep going like this and turn it into a song, but that's not the point. And believe me, in every moment of panic and every drop, there was always some fundamental reason behind it. The media would go all out with sensationalist headlines, warning that the apocalypse was near. And of course, at some point, a recession will come. It's cyclical. It has to happen. But statistically speaking, if we look at things on a yearly basis, it's unlikely that it will happen this year. Eventually, that statistic will break and it will arrive, no doubt about that. But let's play with the odds in our favor. Right now, we're in a moment of fear injection. In other words, we could be at an extreme market condition where we've identified a solid support zone in the S&P 500 and the Nasdaq. The Nasdaq in particular could still drop a bit more, and that wouldn't be a big deal. Now, let's transition into crypto, because that's what we're really here for. Take a look at MicroStrategy, our best proxy for the crypto market tied to traditional finance. We had been speculating that this could be a well-placed trap, and we needed to see a recovery. So far, we have that, but of course, everything remains to be seen. Something else to consider is the US dollar index. I won't do a full technical analysis right now because that would take time. But let's zoom into the daily chart. The fact that the dollar is weakening, we could already start seeing it coming since early March. If you look closely, the market had set up a clear trap. It went hunting for a structure, compressed the price, likely started distributing, broke the creek, formed a flat correction, and then returned to the origin of the breakdown. I mean, what more do you need for the market to tell you exactly what's happening? The dollar is in a downtrend, and in the coming weeks and months, we will likely see further devaluation. And that could eventually lead us to believe that risk assets, Bitcoin and crypto included, could benefit from this scenario. Right now, we have fear in crypto. We have fear in traditional markets. And there's very real uncertainty fueled by the new US president. All this instability that the average investor is experiencing right now feels very real. It's a Molotov cocktail that could be signaling that we're about to see some aggressive volatility. In fact, we're already seeing it. In my opinion, they're shaking us up. Just look at Bitcoin. Watch how it drops aggressively. Then suddenly the news about the strategic reserve comes out super positive. It immediately corrects. They create volatility. And in the end, the strategic reserve turns out to be worthless. When they shake the tree as hard as they're doing right now, it's because something big is coming. It's just a way of speaking, but more than that, we'll soon move past this turbulence and see a clear directional intent in the market. If you watch Crypto Insight videos, I think you already know our perspective on the markets for the mid to long term. We might be at a market extreme where a long-term bullish outlook actually makes sense. From what we see in the charts, if things go well, we could reach some very interesting upside levels in the crypto ecosystem. And if things don't go well, we'll be able to limit losses very quickly. So no matter what happens tomorrow, today, the investment window still makes sense. Now, let me know your opinion in the comments. Do you think this is a good buying opportunity for crypto? If you like this video, hit the like button, subscribe to the channel, and turn on notifications so YouTube alerts you about future uploads. And share this video with other trading and crypto communities so more people can see this content. Best of luck with your investments, and subscribe now. Do it. Subscribe.